Let's bring in our chart of the day because we've mentioned this stock a handful of times already. It's Qualcomm moving lower following earnings. The chip maker is missing on revenues and offering up some weaker guidance. You know who I'm going to turn to on this one, right, guys? Well, it's got to be Jim Lebenthal because you are.
He loves this thing.
Yes, and so let's talk about. Let's dissect it. Let's talk about this because
let me
it's
throw
tough.
a few swords out for me to fall on first, if I may, Dom. Apologies, because I did make this my final trade 2 days ago. I will own that. However, I do want to talk about a 9% decline in the share price being an overreaction today. They gave lousy guidance, okay? Whenever I look at a stock that's down like this, particularly in the technology space, I think about, is this broken? Is this, and I'm sorry if I'm insulting anyone, Intel 5 years ago? I don't think so. I think this is still a company that's the intellectual property leader in the smartphone space. The smartphone market seems to be taking longer to turn around than anyone expected. Now, the question I do have, and I think it's for all of us here, is does this imply something for Apple tonight? Because there's one of two explanations here. Either Apple is just eating more and more market share from Android and Qualcomm's feeling it, or the overall market for smartphones is going down, or excuse me, not recovering as fast as expected. With how much market share Apple has gained over the last few years, I find it hard to believe that this is a market share issue. I think this is just a simple macro issue of smartphone life cycles are going longer and longer. Most people I talk to, I don't know about everybody else, extends how long they own their phones until they upgrade, even with free upgrades these days. That's really the main current here of what's going on with Qualcomm. There's a side current here that 25% of their business is not smartphones, and it's growing, but it's not growing fast enough. This is automotive and Internet of Things. It's not growing fast enough to make this other than a smartphone story right now. But what you've got is a cheap stock that doesn't appear to be broken or fatally flawed, just has some bad guidance for the next quarter. Hang in there.
I think it's always risky to use Qualcomm as a read-through to Apple. I don't think there's ever been a quarter where they've synced up particularly well, and I don't think this is going to be the time that they do either. They might coincidentally both report weakness in phones. I just wouldn't draw that causation from the correlation. I think Warren Buffett said it best. Somebody asked him about the valuation last quarter. Maybe it was on CNBC. And he said, think about it. Go up to an Apple user, offer them $10,000 right now, cash. The only stipulation is they can never buy an Apple product again. Almost nobody would take that deal, right? So let's not even put Android and iPhone or the Apple ecosystem, the Apple product ecosystem in the same conversation. I really think it's Mars and Venus.
All right, so Bill, but I mean, Qualcomm, forget about just set aside the Apple story for right now. I'm wondering whether or not Qualcomm is just the next chapter or next page in what's already been I guess, sell the news kind of event when it comes to computer chips, right? We've talked about AMD. We had Infineon, by the way, out in Europe overnight. Also that same kind of stock reaction, some perceived weakness in the future. AMD, NVIDIA shares were real underperformers yesterday. Now, albeit NVIDIA has been on an absolute tear over the last several months here. But chips had been set up arguably for perfection. I mean, there was a lot of expectation. Qualcomm was not like NVIDIA. But is it being caught up in the same kind of, you know what, maybe computer chips are due for a breather kind of trade?
Well, we wouldn't be doing this move in Qualcomm today, Justice, without talking about the positioning that's taken place. Bull markets fuel speculation. That's what we've seen. And I'm looking at this sort of the NVIDIA phenomenon. You look back to that May report from NVIDIA with 20-some%, and it kept going. No one wants to miss that move, and everybody wants to try and catch the next one. So you're seeing positioning and speculation in a bull market that's buying this stuff ahead of the earnings. You have options that are very, very readily available to institutions as well as the retail public, and they're buying calls. So the positioning that takes place into these earnings is already overdone. And then as soon as these, doesn't have an NVIDIA moment of being up 20 plus, how are options traded? So you have a market maker that's going to sell the option to the person buying it, and the market maker goes and hedges their risk. They are then buying stock.
On the heels of it.
On the heels of that to hedge out their risk, become neutral. So this is sort of the gamma effect that you've heard in the past, where when these don't perform as much or as well as expected, it's not a blowout quarter, you have those shares being dumped. And that's where these things are having these massive reversals. AMD beat top and bottom estimates, but then you see their big reversal. And this is something that I started paying attention to with going back to Micron about a month ago, where Micron had a pretty solid report. They have been so negative previously, but then they were up 5, 10%, 5, 6, 7% before the bell opened and slammed right away. We've been seeing that very often. Uber was up quite a bit, slammed right away. This is a positioning thing, and I think it's the NVIDIA phenomenon.
It's a great point. People are like, I thought AMD was good. Yeah, it was good. That's why the stock went up 70% year to date going into the report. Like, what do you think? And nobody knows it's going to be good, and we're all just sitting here like it's a CD at the bank, and then it's going to move after. I wish it were that easy. I think you're spot on. We've had some great reports, nothing but good news, negative 7% the next day. It's because people had been anticipating that really since the spring when we got through the mini banking fake crisis.
Speaking of the option side of things, I will just kind of put this on the table right now, and we can leave it there as we move on.